Steve, you have a community where people get together. You have chat rooms where you work and people talk about the things you teach and what's happening in the markets. Welcome back.
Hey, Dale.
Yeah, Steve, I hear you.
Okay, good. I wasn't
How are
sure
you?
there. You got another guy, Steve, there, so I was a little confused about who you were talking to.
Well, okay. Yes, it's
Yeah.
I'm talking to you.
Yeah,
And
all right. Good to
God,
be
so
back.
yeah, man, sea change since you and I talked last. Why don't we just get right to it, Steve? And
Has there
uh,
ever been? And this was, good planning where you scheduled me a couple of months ago to come here on this day of big moves. So you
yeah.
had good foresight.
All right. Well, look, I knew that this year, and I think we talked about it last year, that people weren't just going to be able to go by the SPY for 3 years and play golf every day.
Yeah,
That
yeah.
they were going to have to learn to be tactical.
Well, we talked about that, and
Yeah.
a little bit of a timing change on some things since I was here last, especially in the dollar and gold. But ultimately, the bigger picture, everything is going pretty much as expected. So we can talk about that. Where do you want to start?
Okay. How about this? Silver lagging dramatically. This gold silver ratio went higher than I thought it would go to. I mean, it's blowing off right now. Um,
Yeah, I mean,
is this a failure in silver? It never really did much. I thought we'd go to make one more new high in silver, and that didn't
so
happen.
you can you see the charts here?
Yeah,
Just want
yeah,
to be
got
sure.
silver up there.
Okay, good. So silver has been in, a positive pattern, even though it has very much underperformed the gold market.
Yeah,
I think that the real key here, when you look at silver and gold, is that gold seemed to be much the gold investors, speculators, the users of gold seem to be much more interested in getting ahead of the tariff situation than
yeah.
we saw in the silver market. So we saw that, and the combination of that and the weaker dollar, there was a tremendous amount of buying going on in gold. Silver was not, of course, keeping up with that as we saw,
Steve,
and
was that? I'm sorry to interrupt, but was that what the whole transfer of all that gold out of the UK to New York was about?
yes, yes,
Getting
and
it here,
now
all in front of front running
yes,
tariffs.
but now
Okay,
they're exempt from tariffs, so there's massive
okay.
supply out there.
Oh, got it, got it.
So that's why we're seeing the big drop in gold and silver. And plus, when you get into a period of a flight to liquidity like we have right now with stocks plunging, historically, gold does not escape that. And
Hmm.
that, people have to raise money. They raise money by selling everything, especially their winners. So that's why gold has had this big reversal today. And I tweeted about that a number of times the last couple of days. Look for gold to lose its luster here
Yeah.
because that's what's going on. So the silver market has this big downward turn, as you can see right over here. And for those of you that are brand new to our work, we do cycle analysis, and on the bottom here is cycle brackets. Those are our guides to find the cyclical rhythms that we see here in the markets. And this is the silver pattern right over here. And you could see the beautiful harmonics in silver as they follow each of these money flows, essentially what it is. This is a
June,
big
July lows coming up
this is
on
a
these
big
cycles.
downward turn. This
Yeah,
expected June, July lows out of here. That's not a
yeah.
big surprise to us. It was still positive, and even though it was, getting up to these fib extension levels, we thought it would get to 35 bucks, and it actually did get there. So that wasn't
Yeah.
bad when you look at that. If you look at the gold chart, and I'm going to put up the gold and the daily in there also because that's important. This is the diamond you and I were talking about when I was here in January.
Yeah.
And I said, well, this looked like it was going to roll over, complete into this
Right.
cycle right over here. And you said to me, well, what if we break out of that diamond on the upside? And
Yeah.
then we talked about what could happen on the upside, and that essentially happened. And I had my longer term projection was 3,200, and I made a projection that at some point gold and the S&P 500 would cross somewhere in around 3,200. That yet may come. So
Interesting.
This still bullish, but we have a reversal going on. Here is the daily patterns, and you can see where these yellow areas are the periods of risk. And this is exactly the spot that we would have expected to get this kind of a reversal. Gold to me looks like it's coming down to a 30.60 down to about 30.20, probably in the next week or two. And then it would be turning up again for another attempt to the upside. But I think that this corrective period that we see in gold and silver coming out into this June, July period is going to start to put pressure on the markets, gold and silver market, the metals markets, and they will actually have this corrective period. Probably get
Okay.
gold under 3,000. So,
Yeah, I'm thinking 26 or so.
yeah.
So while the metals are declining into July, I kind of thought, we'd have a rocky period with all these things being broken, trade routes, with tariffs and everything that,
Mm-hmm.
you don't crash an old system and replace it without repercussions.
Correct.
So, I was thinking that everything kind of got cheaper into that June, July period. Do you think
Well,
this bear market in
it's a
equities
perfect
could last that long?
it is a perfect alignment. Let's take a look at the S&P 500, where you see right over here, and I'll just blow this up. And all along, we have been talking about this decline coming out here into
Yeah,
this sometime between May and June. And that's what we have right over here. You can see the periods of risk right over here. And this is actually a bigger one because we turn negative over here. And this is our reversal scout, which is very helpful and tells us when these cycles are rising or declining. So we've been looking for 5,400, maybe even down as low as 5,100 here. If it gets to that monthly 38.2%, which is possible.
it is.
This area between, in the 5,300s to 5,200s is pretty reasonable on the downside now. Of course, this market isn't open yet, so this hasn't updated. I don't have it set on 24, but it's going to be back down into this 61.8% confluence right now. And
Right.
you could see the gorgeous harmonics that are in here on these cycles that really have pointed well to these corrective periods right in here and here, even in this rising bull market. But the bull market's now over. And we have on our monthly chart, we have the correction going into 2026. Though over here, the second in Q3, late Q2, Q3, we expect some kind of an upward recovery in here that would set up another very significant major leg to the downside into 2026.
Okay.
So
All right. So the worm, the
that's
worm,
the
the worm
weekly.
has
This is
turned.
the Pardon me.
The worm has turned in equities.
It has
Because they're
definitely,
still
and
our guys. Eh, we really do need to. People bought this 10% correction, right? Because it's been working for 1,000 years, and they
yes,
haven't been punished. For buying the first 10%. There could be another 10% here back to about my targets for a while been 4,900, the
yeah,
megaphone, and there's weekly moving averages. There's so much confluence there. Um,
yes.
that would be enough, I think, if we were down at 4,900 to start looking to buy this market. Do you think
Yeah,
so?
my number is 5,100 here, and right now I'm going to look for that and kind of hold to that. But,
Yeah.
I think it's going to be way, way lower into 2026. So,
You have
uh, you
anything
know,
coming up? Okay, so I'm all right. Then give me your 2026 number. Are we back at 2,500 S&Ps or
well,
3,000? Cut it in
the
half.
the major support, I'm just going to bring a monthly chart over here for you to see. The target over here where I would be projecting, out, and you can see the cycle rhythms in here that take you
Yeah,
out to mid 26. I
yeah.
would be projecting, for the first target over here, 4,800. This is 4,500 right over here on the
Okay.
61.8%. That
Yeah,
would be, you could see here the 50% is a 21.6% decline
yeah,
after getting up to 207% valuation compared to GDP. I would
yeah.
expect that it would be much worse than that.
Yeah.
So, this 61.8 is at about 4,500. I think that's pretty reasonable. You could get all the way down here to this last support around 34. That's what I was looking at as the potential for gold and the S&P 500 crossing
Okay.
in
Yeah.
those levels right over there. And that's a very extreme situation in here for it to get there. It would take really a significant market panic. But if you want to, talk about, why, it's because the stock market's been inflated for decades by massive
Right.
government spending, huge debt, the Fed accommodating crises in some very extreme way, and that's how we got up to 207% of GDP when the fair value is probably about 140% of GDP. So, and the normal bear market is on average is about 33%, with bear market lows about every 53 months. So, it's pretty reasonable to expect to get to the 4,500 level or lower on the S&P 500 in a normal bear market situation.
Yeah. So Buffett did it again.
Yeah, I
do
mean,
you, do you
given
chart real estate at all, Steve, or pay
no,
attention to those
not really.
cycles?
Yeah, not
Okay.
really. My team does, and they've got some analysis on that, but I don't really keep up on that. That's their
Okay.
job.
All right. You know how people that are out there like us, someone will come and say, well, Pinkert's thinking this, and someone said to me that you were looking for an important low in the bond market in March. We had it, didn't we? That little pullback to
Yeah,
88 and a half in
as a matter of
TLT.
as a matter of fact, I have ZNs here, so let's look at the TLT because that's the ones you're interested in.
Yeah,
Um, the look at the cyclical pattern in here. We were looking for that trough to occur somewhere early in the year, right there.
yeah,
And it came here in January,
yeah,
and now we're in this rising phase, as you could see right over here on the dominant and the minor cycle patterns.
yes,
And that the reason that I have this pointing up into the rally into June, as you can see right over here, is
right,
because of this. And I'll show you the TNX, which is the 10-year yields. Look at the exquisite cycles that are in here. Just unbelievable inverse picture of money flows in and out of the bond market. And that's what you have here. We had
yeah,
been projecting that we would get the yields down to under 3.9% into this period, May, June, right there. And that's why the dollar, of course, is collapsing the way it is,
right,
because it's money flowing to where it can get a better yield, into Europe and other places, or out of the US for that reason. And so we were looking for 3.9% over here out into this May, June period. That is why we have this projection in the TLT of this rally over here into the May, June period. And I only have this projected up to 95, which is the
yeah,
61.8, but it could go higher than that
yeah, yeah.
under a condition of 3.9% on the 10-year.
Okay.
So yields,
Uh,
a bond market still to go up, flight to safety, and just a plain allocation changes for investors as they realize the stock market is not what they had hoped it would be, and money moving into the bond market just for their comfort.
okay. Will you confirm the statement that recency bias of the dollar being a safe haven currency, or when it is weak, it equates to risk on, has changed. It's dead, and a weak dollar is now risk off.
That is, I would agree with that because of the relationship, especially to interest rates.
Okay.
And we have once the dollar, and last time we spoke, I talked about this low coming up and the dollar likely going to rally higher in there. But
Yeah.
look what happened. That rally came into February and then it
That
broke the
was a
key.
tariff day. That was the
Yeah.
tariff day. Yeah,
Yeah, broke that key cyclical low right there.
yeah,
And every time you do that, look at this pattern over here, which is fairly similar. And then you
yeah.
break that cycle low and it sets up for the decline into the trough. This
Right.
trough here, guess what? June,
It's way
July.
out there. Yeah.
Yeah.
How
So what does
about
that tell you?
95? We'll be beneath par by
I
then, I
think
think.
I think it'll get below par. If you look here at the daily
Yeah.
patterns, right here, you can see they're gorgeous. And what they say is another week or two of dollar weakness and then an attempted rally.
Right.
So when the dollar gets this rebound in here, it's probably going to align with a rebound in yields, which
Right.
also is coming shortly. All of
Okay.
that is going to be fake. And all
Yeah.
of that will easily get people trapped
Fake
because
news.
you can see all of this time in here where or all of the space where you could get some uptick in the dollar market, but then when
Right.
that's over with and this rally period's over with, the dollar's going to be falling again, interest rates are going to be falling again, and of course, what does that tell you about the stock market? It will be falling again.
Right. I think we have everything cased. Did we miss anything? Um, I love when you come on because we kind of we put the jigsaw puzzle together.
Yeah,
So
I mean, you can look at the oil market. I mean, I think which
yeah,
is pretty.
uh, I've been waiting for one more washout for a year, Steve.
Yeah,
Towards 62. I've
yeah.
a speed line there, and
All right, let me get this
I keep
analysis
asking
up.
myself, am I going to be left at the altar? Because I've been talking about, I do believe there will be military strikes coming up.
Yeah, I mean that's we're having military strikes right now
Yeah,
as far as the Yemen and the Houthis go, and
right.
we don't know what will happen as far as the threat going to Iran. That
Oh,
has
yes, we
put
do.
you think, oh, what you think they're going to go after
Yeah,
them? So
look, it's been maybe have you ever had like a mission in your life? Well, not Netanyahu's mission has been to, he's been coming to Congress warning about this threat for a long time.
yeah,
And the regime, not the people, the regime in Iran has been threatening to wipe Israel out forever.
yeah,
So
absolutely,
there was an assassination attempt that has been on President Trump, who isn't the most forgiving person.
yeah,
He's
I
not
would,
Pope John
yeah.
Paul is going to go, meet the guy in jail. Oh, but he's dead. Can't do that
Well,
anyway.
if
So
if you
go
believe
ahead.
in cycles like I do,
I
then
do.
where this rising phase is over here out in June, July, August, that would be probably where the bombing would come. But in
Yeah,
the
I
meantime,
do. I
in
do.
the
I
me
think.
in the meantime, this is still looking lower in here in the oil market. We had it as a potential failure. Look at here. This was marked sell zone.
Yeah,
I mean, and on the daily chart, I mean, it was spot on. So I
yeah,
can
it
tell you,
was.
looking at this here, you can see that the end of the next cycle, which looks like it's going to be further declines, is June 5th on the
Okay,
daily
right in
chart.
front of driving season.
Right. So, and
Okay,
you look over
got it.
here, this is May, end of May, beginning of June. This says to me oil's going to be going down into that period. And
Okay.
you could get to $62 here.
Yeah. Okay. Well, I'm gonna be buying calls down there.
Yeah. And
I'm
interestingly,
not in the $100 camp, but
yeah.
89, 80 rally from 60 to 80 on an event. I think that's very viable.
Yeah, I think that's possible.
Yeah. So I mean, everyone's bearish oils now. So
Yeah.
except Oxy because Warren's. Um, why don't you show people how they could check you out?
Sure.
Steve. We do something pretty unusual here. We interview competitors. But you know
Yeah.
what? I don't look at it that way. I look at it as wherever people hear my voice, if they find a place that works for them, that's the mission.
Yeah.
Okay, that's the goal. There are a lot of talent, really not a lot of talented people, but you are. So
Well, I'm
I'm
honored
on.
that you'd include me in that list. So,
Yeah, I mean, look, I mean, most of the people I talk to, or I wouldn't waste my time, viewers' time, or anything unless there were
yeah,
things that people could learn from
appreciate that.
people. So
Well,
go ahead.
if you look here, you could see my picture here on the CBOE 1974. That's me in the corner with my hands up. That was one
Yeah.
of the, I got to the CBOE floor about maybe 8 months after it actually started. So
Wow.
been trading for over 50 years now, which is just astounding to me that I'm still here doing this and having fun at it. And we have a
It
membership,
is a miracle. It
yeah,
is a
isn't it?
miracle.
It is. And I
Uh,
still have my mind is still sharp. I'm not so sure about my body, but my mind is definitely. Uh, so this is a membership site. We have a lot of actually a massive amount of education and analysis that we share
yeah.
with our members. We also have a day trader platform that we have a special we're running right now for 24.50 for the first month. It's fantastic. And if you scroll down, you'll get a lot of idea about many of the things that we offer in here and our membership. So you can see that right in here. You can come down and click on one of these and learn more about our memberships and the specials. And you can write to team@askslim.com and ask any questions, and we'll be able to answer that for you. So we have a great thriving community, just as I know that you do. That's what's great about putting us all together because our communities get to learn from each other.
Yeah.
I always want to share where there's good opportunities for education and analysis, wherever it may be, because I think that in our business, we all need to support each other. I mean, this is a
Yeah.
very tough game with a high percentage of people that try to be traders failing at it. So
Yeah.
that you really have to, do what you can to direct them into the places where they can get the
And there's
best.
no law against, Steve, people have more than one trading account, right?
Yeah,
Some they use for long-term stuff and other for swing stuff, spreading. There's
right.
nothing wrong with being a member of more than one community. The
Yeah,
more
no,
intelligence gathering you do, and as you can tell, that's a perk of my job is
yeah.
besides getting to talk to sharp
Especially,
people, I get smarter talking to them.
yeah. I feel like I don't know if you resonate with this, but at my age, 75 years old, I'm not worried about giving away anything anymore or anything like that.
Yeah,
It's just like
yeah,
all I want to do is serve people so that they can,
yeah.
be the best they can be at
It's
this.
it's our legacy in the industry that people 20 years from now will be saying, I remember how Steve would look at that cyclically, or that there's a three drive formation that Pinker used to teach.
Yeah. Yeah.
So it's great helping people. I know that's in your heart, and
Yeah.
I always have a great time talking to you every 3 months.
Yeah, fantastic. Well,
So,
we're gonna be adding a great feature to our site down not that far off because we're training our AI right now, and our AI is
oh,
essentially going to be me.
okay,
So everything that I've learned, everything I've ever taught is going to be in there, and
wow.
people are going to be astounded by the quality of that.
All right. Well, you know what I say, Steve? This is my war cry this year. Ready?
You ready?
Let's have a good decade this year.
Yes, absolutely.
Steve Miller, everybody, follow him on X at Ask Slim. What's your body weight nowadays?
My body weight.
Yeah, I'm asking you, Slim.
I
What do
I
you
weigh
weigh?
I weigh 228 down from the 250s, and that's
All
because
right.
I switched to a primal paleo type eating plan some years ago. I
Yeah,
eat no grains whatsoever. I had arthritis. It's gone because it's an anti-inflammatory diet. So
yeah,
I
right.
feel young.
All right. Well, not as slim as you were going over your CRB charts in 1980, but
No, at
huh?
that time I was about 192 pounds then.
You're in a fighting weight. All right.
Right.
Well, Steve, hope that pips just rain down on you and your people
Yeah.
this
Best to
quarter.
you.
All right. Steve
Take
Miller,
care.
everybody. People are thanking you. They loved it.
All right,
And
great.
that's a wrap, everyone. You could join the team in 18 minutes on the morning edge. And how do you like me now? Short yen all week. Huh? Gold down. Who's short Newmont with me? Anyway, okay, have a great day, everyone. Sometimes you have days like this. I'll be playing Van Morrison's song on my Twitter feed. Mama told me there'd be days like this where everything seems to fit. All right, don't just count your pips, count your blessings. Adios, everyone. We'll wrap it up. TGIF tomorrow. Jobs report. Gee, just what we need, huh? Let's throw a little more gasoline on the fire. Adios, and thanks again, Steve.
Take care.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.